Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Global markets see their worst day of 2019. The Dow Jones falls over 700 points. Asian markets are off to a negative start yet again after China escalates the trade war by allowing the yuan to weaken past the $7 per dollar mark. The US has formally labeled China a currency manipulator post the People's Bank of China's action on the yuan. The Rajya Sabha has voted in favor of bifurcating the state of Jammu and Kashmir into two union territories. It also adopted the resolution to remove Article 370. The rupee sees its biggest one-day fall in over 6 years, dragged lower by a mix of weak local and global cues. And two nifty companies, Titan along with Indiabulls Housing Finance, will report their numbers today. A rapid deterioration in relations between the US and China caused stocks on Wall Street to sink. The Dow and Nasdaq and S&P 500 in fact saw their worst day of 2019. In fact, the tech-heavy Nasdaq has now suffered its longest losing streak since November 2016. Ranita Young of Bloomberg News tells you what happened in that session in this report.
U.S. markets ended lower on Monday with the Dow, Nasdaq, and the S&P 500 all down more than 2%, happening as the United States and China trade war flares up a little bit more and investors search for safer places to hide their assets. Now, this also happened as China allowed its yuan currency to hit its weakest in more than a decade. Treasuries led a global rally as investors searched for stronger assets, safer assets, and the 10-year Treasury yield actually tumbled to its lowest back since hitting a level that it hit after U.S. President Donald Trump won his election in 2016. We also saw the volatility index at the CBOE spike and soft commodities extending a decline on that trade news. Something else that extended a decline on trade news were chip stocks, which saw among the biggest losers in that category. And by the way, corporate earnings season is still happening. Cars.com slumped, hitting its record low after disappointing earnings. And up next, we know we have AIG, ABN AMRO Bank, and Standard Bank, to name a few. And that's a look at your Monday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
Now, markets were roiled across the board on account of what China did at the start of trade yesterday. Now, President Donald Trump said the latest decline in the yuan is called, in his words, currency manipulation, and indicated that he'd like the Federal Reserve to act to counter the Chinese action. Trump tweeted on Monday saying, and I quote, "This is a major violation which will greatly weaken China over time," unquote. Now, his comments come after China responded to the president's threat to raise tariffs on $300 billion of Chinese imports, letting the yuan tumble to the weakest level in more than a decade and asking state-owned companies to suspend imports of U.S. agricultural products. Joe Sobzik of Bloomberg News brings you the latest in this report.
Well, from a practical standpoint, there are no penalties that are immediately imposed because of this, and the law encourages the U.S. to enter into negotiations with whoever's the currency manipulator. Now, those negotiations are already going on, but this is a significant escalation and gives China less of a chance to back down, and is making clear that the President Trump is ready to double down on this trade conflict with China. It is liable to have obviously some repercussions in financial markets, but it also signals that this is going to be a long trade war without any immediate sense of where it's going to go and how it might end. The additional tariffs that the president is threatening to impose on China will affect the consumer goods, and that will have impact in the U.S. In terms of prices for voters leading up into the 2020 election, and then we'll have to see what the overall impact of the economy ultimately will be. But this is it's very clear that Trump is in no mood to back down or soften his stance in an attempt to get negotiations moving.
Now, what else is likely to happen, and what steps are China likely to take Tom McKenzie of Bloomberg News puts forth the possibilities of China's course of action in this report.
The gloves are off, aren't they? And the interesting part of all of this from the Chinese perspective is that up until this point, up until yesterday, China had been holding firm on this line in terms of the currency, doing everything it could, it seemed, to ensure that it didn't go above that 7 level as talks continued. Now, of course, it has removed that support, even when we're expecting Chinese negotiators to head to Washington to continue these negotiations in September. So China, it seems, has run out of patience. There is a meeting going on now between senior leaders, we believe, in Beidaihe, this coastal resort in China, where we are likely to get clarity, maybe on the back of that meeting, around the stance. But it seems very much that ever since May, when, of course, Trump and the Chinese side broke up their negotiations, the Chinese side has become a lot more tough in terms of the stance they're taking. They want to see tariffs removed. They want to see a more balanced deal. So what happens now in terms of retaliatory measures? We've had the currency, of course. We've had the banning or the blocking of Chinese companies from buying more agricultural purchases, ag goods from the US. Additional measures that China could take, of course, we could be looking at additional tariffs. They don't tariff all of the imports into China from the US. They import about $130 billion worth of goods. They're currently tariffing about $110 billion, so they could increase tariffs there. They could, of course, go for these non-tariff barriers we've been talking about, so US corporations operating and having heavy exposure to the Chinese markets could face more pressure around a whole load of issues, whether it's deals or licensing or checks and compliance issues. All of those things will now be of a concern to those US corporations with a heavy footprint in China. And then there is the unreliable entities list. So those companies that China is going to ban and block from its markets, that list could be published as well. The other unknown, of course, and we've heard from Stephen Roach at Yale University about this, is whether or not China now looks to sell off its holdings of US Treasury. Stephen Roach says we should not dismiss that as a possible idea.
Right, so that's the latest, and that's all the possible actions that China could take at this moment. We're, of course, waiting for any updates that come therein. But for now, let's take a check of what's happening in the Asian markets. I'm joined live by Paul Allen from Bloomberg Studios in Sydney. Morning, Paul. Everyone's talking about the latest measure by China and the impact in the Asian markets. Cuts for a second day in a row, looks like, and sharp cuts at that.
Oh, very much so. I mean, the phrase sea of red pretty much captures the mood around Asia-Pacific equity markets this Tuesday. And as you've been hearing, it's this accusation or accuse US labeling China a currency manipulator earlier this morning, really intensifying that trade dispute between the US and China, the world's two largest economies. So let's take a look at what we've got on equities markets right now. We've got the Nikkei off just a shade under 2%, the Kospi in South Korea off 1.5%, the Hang Seng Index in Hong Kong down 2.2%. And here in Australia, the ASX also off 2.2%. The Aussie dollar is also getting near a 10-year low. Aussie 10-year yields are around about 1%. That's the lowest they've ever been. And I mention that because we've got the Reserve Bank meeting today, one of those 5 reserve banks across the Asia-Pacific meeting. We do expect the RBA to stay on hold this time around at 1%. Haven buying, though, that's looking pretty strong. We've got the Japanese yen at 106.31, and we were hearing from Goldman Sachs' Zach Pandel earlier. He thinks the yen's got more room to strengthen. And, of course, gold, 14.61, continuing to catch a bit. Back to you.
Thanks so much for that, Paul. Now, let's stick with currencies for a bit and talk about the Indian currency. It weakened to a 5-month low on Monday, and this was led by the cocktail of weak global and domestic cues. Some of that we've already spoken about. The yuan, of course, weakened past the 7 per dollar mark, and that was a key trigger. But adding to that was a weak sentiment in the equity markets, tensions over the state of Jammu and Kashmir, and that all added to market nervousness. The currency was not only the weak or the worst performer in Asia, but it was also the one that saw its biggest one-day drop in over 6 years. Continued foreign outflows are not helping matters either. Foreign investors have sold nearly 20,000 crore rupees worth of domestic equities between July and August. And now, with the US labeling China as a currency manipulator, it may see further weakness in today's session as well. Let's see what's making headlines across the globe. Ritika Gupta of Bloomberg News brings you the first word headlines.
I'm Rishka Gupta with the first word headlines. The trade war is taking another dramatic turn, with the US Treasury designating China as a currency manipulator. President Trump started the move, criticizing the yuan's latest fall and suggesting the Federal Reserve should take action. That follows Beijing responding to the threat of additional tariffs by letting the yuan tumble to its weakest in more than a decade. Beijing is also asking state-owned companies to suspend imports of US farm produce. The UK will join an international mission to protect shipping in the Gulf as tensions rise with Iran. The government is encouraging allies to safeguard the Strait of Hormuz, although EU nations have been reluctant so far. Cooperating with the US marks a shift in strategy. The UK had previously called for a European initiative to protect shipping as it sought to preserve the 2015 Iran nuclear deal. North Korea has launched more projectiles, ramping up the pressure on the divided peninsula. Seoul says the North fired 2 unidentified weapons into the East Sea before dawn, the 4th such launch in about 2 weeks. The latest test comes as South Korea and the US began military drills, which Pyongyang describes as a violation of an agreement struck between Kim Jong-un and President Trump in Singapore. Wall Street's biggest fall of the year has seen the wealthiest 500 people on Earth losing more than 2% of their net worth. 21 members of the Bloomberg Billionaires Index each lost $1 billion or more as markets reeled from the escalating trade war. Jeff Bezos lost the most, shedding $3.4 billion as Amazon shares tumbled. However, he's still pretty well off with a fortune of $110 billion. Global news, 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta, this is Bloomberg.
All right, let's talk about the Indian markets now. Agam Vakil is here to tell you all about the today's trade and also what's happening in the futures and options space. Agam, we've just heard from, Paul and in fact about the US market sharp cuts across the board. It looks like it's going to be the case at start at least, perhaps, in India.
Oh yeah, there's no doubt about the fact it's going to impact our markets, Alex. And we very well could see a little more fund flow move out from foreign portfolio investors. But for now, well, SGX Nifty is not indicating as deep a decline as one may have expected it. It was still down about 0.6%. It's all going to come down to how trade eventually pans out through the course of the day. But for now, we did see a deep cuts there, and Nifty losing out on crucial levels. Another one actually, considering it's now trending below 10,800. At one point in time, on an intraday basis, it had even moved below the mark of 10,800. Mid-cap and small-cap indices, of course, also declining, as was the case for the banking indices, both the Nifty Bank as well as the PSU Banking Index. And the ADRs this morning are also declining. In fact, very, very sharp cuts for the likes of Wipro, Tata Motors, and Vedanta. So there's no respite there, and it's the same for something like an ICICI Bank or HDFC Bank. Now, moving on, we, as suspected, we saw another 2,000 crores moving out from FIs and DIs, on the other hand, buying stock worth around 1,870 odd crores. And moving on, we're also taking a look at how well trades panned out for the contributors. And really, it's been largely broad-based, but we do have the likes of Reliance Industries, HDFC Bank, and Kotak Mahindra Bank provide a bulk of the losses. So we'll be keeping an eye on some of these counters. Reliance Industries, of course, is facing a downgrade by at least one brokering firm today, right now. So moving on, let's talk about futures and options. And again, there were shorts building in as far as the Nifty futures go, 3.8% in open interest and 12% added in open interest for the Nifty banking futures. Well, in terms of the open interest distribution, as one might expect, more and more writing around the 11,000 call. Yesterday's resistance is today's support, and it's the other way around. But for now, 11,000 becomes, instead of a lower end, it now is become the higher end of the band for. And of course, that's explained in the kind of writing that we've seen in the calls as well. Moving on, let's also talk about the VIX, and that's risen sharply and now above 16.5, and this is where things can get a little gritty. We'll keep an eye on this one. The Nifty put call ratio also, as one might expect, has moved lower to around a neutral level of 1. Moving on, let's talk about stocks as well. We have MGL, NBCC, Engineers India, all looking at an increase in OI. Except for MGL, we've seen a lot of declines coming through, a lot of shorts, and unwinding in CESC, Equitas Holding, and Bharti Infratel. But traders should brace themselves for another tough day today, Alex.
Absolutely. Thanks so much for that, Agam. All right, the Economic Capital Framework Committee, led by former RBI Governor Bimal Jalan, may meet again this month before submitting its report to the RBI. Sources say that the panel is likely to hold consultations over a few of its recommendations before it finally submits its report this month. Nikunj Ori gets you more details.
The panel tasked to decide RBI's economic capital framework will meet again in August to decide the amount that it's going to suggest the RBI transfer to the government over a period of 5 years. The panel will hold some consultations amongst its members to finalize a few of its recommendations, and is also going to discuss whether it's going to carry the former Economic Affairs Secretary Mr. Subhash Chandra Garg's dissent note. Remember, Mr. Subhash Chandra Garg was a member of the panel and had disagreed to various recommendations of the panel. Now the panel is going to meet again in August and submit its report to the RBI by August end. Over to you.
Right, now, a few of you have been looking forward to this. We're talking about earnings now, and in fact, we're talking about one of the two nifty companies reporting earnings today. It's Indiabulls Housing Finance, and it is likely to be a subdued quarter for that company that has been in the news for all the wrong reasons recently. Shefali Malik takes us through the expectations.
Indiabulls Housing Finance is expected to report a subdued quarter this time around. Their net revenue is expected to go down by about 11%, and profit is seen down by about 5% on a YOY basis at about 998 crores. Their disbursements are expected to pick up slightly from what it was in the Q4, where they did about 7,300 crore rupees worth disbursements. This time the estimate is about 8,000 odd crores, and the AUMs are expected to decline 3% on a sequential basis. Now, quantum of sell downs will be a key monitorable this time around, as the company might have done so in the quarter to meet their funding needs, and margins as well are expected to contract on higher cost of funding. Now, this time around we can expect lower upfront income from direct assignment, which was a very high number of 500 crores plus in Q4. So that element is expected to be subdued this time around, and we'll see the impact of that in the form of lower bottom line. Operating expenses as well are expected to increase sequentially, and asset quality will be a key monitorable for them this time around. And remember, towards the mid of June, we saw the Radius deal happening. And the company, the management did tell us that time that they have received funding funds from them in the form of recoveries. So we'll look forward to that if that gets accounted for in this quarter. A couple of analysts I spoke to weren't really sure that whether that money will be accounted for in this in Q1 earnings. So we'll watch out for that as well when the company comes out with its earnings.
All right, the second of the two nifty companies is Titan, and Agam Vakil is back to tell you all about the expectations. Agam, based on the commentary that we received from the management and taking that into context, how are we looking at the quarter?
Yeah, well, considering there is a slowdown in discretionary spending, it's very well likely to impact Titan as well, and that was indicated in the quarterly update too for the company. And I'm going to start off with the basic numbers, and starting off with revenues. We're likely to see a very strong 18% growth on a year-on-year basis. EBITDA margins expected to remain flat around 11.5, and net profits likely to rise 19%. Now, in the quarterly update, this is perhaps the first time that the company mentioned the kind of growth that they have seen in the jewelry sales, where they do mention it's nearly 13%. Of course, we're waiting for the final number, but they have suggested there is a little bit of a slowdown. And of course, we've also seen higher gold prices, which have impacted consumer demand, according to that very press release. But watches, on the other hand, are expected to rise around 11% in terms of revenues. Tanishq same-store sales growth is likely to also remain buoyant, despite the fact that there has been, again, a sentiment which is dampened off late. And gross margins expected to contract perhaps 50 basis points, not too much. On the other hand, while there could be a little bit of margins pressure, and despite despite the fact that there has been a slowdown, it's very likely that, well, a Titan could report a stable quarter.
Thanks so much for that, Agam. All right, turning to the primary markets now, as the first offering from Shapoorji Pallonji's main business vertical, the Mumbai-headquartered group is looking to list its solar EPC arm called Stirling and Wilson Solar. The IPO will also be the largest equity primary offering this year. Somit Sarkar is here with all the details. Somit, how big is the IPO and what does the company do?
Well, the company is looking to raise as much as 3,125 crore rupees from this IPO in the primary markets, and that is at a price band of nearly 775 to 780. Now, the IPO is a pure offer for sale, and it opens today, and it will remain till August 8th. And the promoter and the chairman will be selling their stake, and the promoter holding in the company would come down to 75% post this IPO. And at the upper end of the price band, that is 780 rupees, the company is valued at close to 12,500 crore rupees. So, Stirling and Wilson Solar is a pure play end-to-end solar EPC company. Now, it was the largest player in the space in 2018. It also provides operation and maintenance services, but this contributes only 1% to the total revenue of the company. Now, the company's order book as of 31st March was close to 3,800 crore rupees, and it has received letter of intents worth nearly 3,900 crore rupees so far, taking the total order book to close to 8,000 crore rupees. Also, the order book of the company, now that is diversified. If you see the company's order book, it has received nearly India contribute. So if you see the order book of the company, 26% of its orders are from the US region, while 22% of the orders are from Europe, while the rest are from Middle East and North Africa, India and Southeast Asia. Now, if you see the company's financials, the company's revenue and net profit grew at a CAGR of 44% and 72% over FY16 to FY19, and its net profit grew at a CAGR of 72%, while its revenue grew at a CAGR of 44%. And that is on the back of more EPC orders coming in from Southeast Asia, Africa, United States of America. Now, its EBITDA margin of that has averaged at around 6.5%, but it has increased from 6.9% to 7.8% over FY16 to FY19, and that is on the back of improved efficiencies and operating leverage. Now, on the debt side, if you see, the company's total debt increased to close to 2,228 crore rupees in FY19, but that was because of an intercorporate loan given to a promoter group company. However, the promoter group company has promised to repay this amount in 90 days post listing. Now, its current leverage is 2.6 at that is total debt to equity, while its total debt to EBITDA stands at close to 3.5. But post listing, this would come down to zero because the promoter group company has promised to repay this amount. Now, the Stirling operates in an asset-light business model, because of which its return ratios are also high. Its return on equity is nearly 76%, while its return on capital employed and return on asset are close to 121% and 12.4% as of FY19. Now, the company does not have any domestic listed peer, and according to the company, they do not have any global listed player which has such a global presence like them. And if you see, as of FY19, the company's EPS was close to 40 rupees, and at the upper end, its price to earnings would come at 19.6 times, while its market capitalization to sales and enterprise value to EBITDA would come at close to 1.5 times and 22.4 times. Now, we went through only one brokerage note which had a subscribe rating for this IPO on the back of its valuations and a larger reach.
Thanks so much for that, Somit. All right, let's turn to the stocks that are listed currently and that are in the news. Mishika Parak is here to tell you all about the stocks in news. Good morning, Mishika. What's on your list today?
Good morning, Alex. I have a long list today. Let's start with the important quarterly results. First on my list is Berger Paints. The results were above estimates with a strong double-digit volume growth. Now, the margin boost was on account of lower raw material costs, especially benign crude prices. And gross margins expanded by 140 basis points on account of price hikes. Now, HSBC raises target to 380 rupees from 360 rupees post the strong Q1 earnings. Then we have Entertainment Network. Their results were in line with estimates. Lower profits were due to higher depreciation and finance costs. Management indicates that advertising spends impacted due to sluggish economy, and the core radio revenues grew only by 1%, whereas solutions business grew by 42%. Then we have Dilip Bilkon. The results missed estimates this time. Lower sales were due to the delay in receiving appointed dates for the HAM projects. Roads and Bridges segment had a dented revenue performance, and mining growth was strong. Now, net profit is down 51% due to higher depreciation and finance costs. Guidance of sales growth is of 15 to 20% year on year, with stable margins, and net debt to equity guidance is of less than 0.8 times by the end of FY20. Then we have SRF. Their results were in line with estimates. Revenue growth was led by chemicals and packaging business. Textiles was sluggish. Other income and tax reversals boosted profits. Now, the management says that chemicals business was affected by the Dahej plant shutdown. It's usually their fastest growing business. And this time it wasn't that good because of the Dahej plant. Technical textiles business was impacted negatively due to lower offtake by customers. The management announces a capex of 424 crores for development of PTFE, which is basically a synthetic fluoropolymer. Then we have Indian Hotels. The results were in line. Revenues are up 4%. Net profit dropped 63% on account of higher finance and depreciation costs. Domestic business grew by 1%, while international business was up 8%. EBITDA was up 57% and margins stand at 17% on adoption of IND accounting standard 116. Adjusted, the EBITDA is up 16% and margins stand at 12.6%. Now, June and July have seen a very good pickup as per the management and strategic partnership with GIC for 4,000 crores investment platform. Then we have Mangalam Cement. The revenues are up 31%, net profits at 33 crores versus a net loss of 15 crores. Higher other income boosted profits and cost controls boosted margins. Now, healthy volume growth was led by ramping up of the Aligarh unit. The EBITDA is up 14 times. Margins stand at 20% versus 2%. And raw material as a percentage of sales is at 10% versus 18%. Lastly, we have Yes Bank. Moody's Investor Service has extended its review for the downgrade of the bank's BA1 long-term foreign currency issuer rating.
Thanks so much for that, Mishika. Now, despite everything that was happening across the globe and sharp cuts in the equity markets here in India, most eyes were glued to the television screens, in fact, because of what was happening in the upper house of Parliament. The Rajya Sabha voted in favour of bifurcating the state of Jammu and Kashmir into 2 union territories. It also adopted the resolution to amend Article 370, and all of this happened while the opposition leaders protested vehemently. Take a look.
स्टेट में एक ऐसा वातावरण जैसे वॉर सिचुएशन है. They are breaking the constitution. I can't tolerate it in Indian Parliament. तो बाहर भेजना. हकीकत है कि जम्मू कश्मीर को धारा 370 में कभी भारत के साथ एक रस नहीं होने कि धारा 370 हटाने में 1 सेकंड भी देरी नहीं करनी चाहिए. जम्मू और कश्मीर को अब यूटी किया, किसी व्यक्ति को उठाकर लेफ्टिनेंट गवर्नर बनाएगा और वो जम्मू कश्मीर के मसले हल करेगा.
Momentarily, you think you've scored a victory. History will prove you to be wrong, and future generations will realize what a grave mistake this House is making today. For heaven's sake, don't dismember Jammu and Kashmir.
So Bengal can become 4 states. Odisha, what number? What's your lucky number? 7? Okay, make it 7 states. They're calling it the final solution. What does that mean? That means 1942. This was the Nazi plan for genocide. The code name to murder the Jews was called the final solution. What are we witnessing today on August the 5th, 2019? In anguish, we walk out.
Thank you.
गुलाम नबी साहब और जितने सारे लोगों ने, बहुत सारे लोगों ने यूटी बनाने पर अपनी आपत्ति दर्ज करी. मैं निश्चित रूप से उनको आश्वस्त करना चाहता हूं कि जैसे ही नॉर्मल परिस्थिति हो जाएगी, उचित समय आएगा, हम इसको फिर से स्टेट बनाने के लिए हम
All the key news and updates in the world of business, politics, and of course markets right here on Bloomberg Quint Live. Do stay tuned. A lot more coming up in just a bit.